Good day, grade 12 learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Sci-Bono Discovery Center, and it is being broadcasted here at Bakama Research and Development Center. Once again, welcome. In today's lesson, we're going to be focusing on value-added tax. If you followed our last lesson, you found that we introduced value-added tax. We went on to speak about the type of goods that are included in value-added tax. We spoke about the different types of supplies. We spoke about the standard rated supplies, the zero rated supplies, and even the exempt supplies. And we went on to calculate a number of amounts on VAT. Today, however, I have different objectives. Now, in today's lesson, I intend to further on calculate amounts on VAT. So my calculations are going to be focusing on VAT using my VAT exclusive. So I'm going to be focusing on my VAT exclusive as well as my VAT inclusive amounts. I will also be distinguishing between my VAT input as well as my VAT output entries. Now, in today's lesson, furthermore, I will also be talking about the amounts that are either payable or receivable from SARS. In today's lesson, please, we will also be talking about the VAT control account. Remember, that is how we are able to determine if the amount is payable or receivable from SARS. Now, we will be integrating today internal controls that relate to VAT. Remember, even in the previous lesson, we brought in ethics and internal control as well that relate to our value-added tax. Now, let us quickly go on to VAT calculations. When calculating VAT, it is important that we establish whether the figures provided are either inclusive or exclusive. That will give us an advantage. Once we know if our amounts are VAT inclusive or VAT exclusive, we are then able to know exactly which figures to use when we calculate for the VAT. Now, if you look on the next slide that I've just put up, you can see that every time whenever we are having a selling price exclusive of VAT, it is always 100%. So selling price exclusive of VAT, exclusive means it does not include VAT. Once it does not include VAT, it is 100%. But when it includes VAT, it changes now. Why? It changes because of the VAT, which is the 15%. Remember, in this lesson, I'll be dealing with standard rated supplies. And my standard rated supplies are at 15%. So it means when I have my VAT exclusive, which is 100%, I would then add the 15%, which is the VAT, all right? So I'm going to add the 15% here, and then you end up with your 115, which now becomes your selling price, inclusive of VAT. In other words, it now includes VAT. That's why you see here, it is now 115. Now, dear learners, it is very important that you understand these formulas. Now, when we calculate VAT, you'd find that there are mainly three options that we can be given, or there are three options that we can use when we calculate our VAT amounts. Let's look at option number one. When we are given the VAT exclusive amount, that is the amount that does not include VAT, exclusive amount, the amount that does not include VAT. Once we are given that one, therefore our formula becomes very easy. It becomes very easy. What we say, remember, this is what we want. You're going to find that here, I'm going to talk about the UK method. The UK method, it simply says what you want over what you have times what you have. I'm going to write it down just in a short while. So here, what we want is our VAT. This is what we want here, okay? This is what we want. All right, so if we want VAT, that is my 15%, I have to have something that I have. In this case, I'm given an exclusive amount. You'd remember what I just taught you a while ago, that when we are VAT exclusive is 100%. Okay, if you remember what I just told you just a minute ago. Now, you then find that you want 15, and what you have is the VAT exclusive, which is 100% multiplied by the VAT exclusive amount. Now, this one, remember, it will be in rands now. Okay. It is very important that you understand this method, because in most times in the exam, if you're given a VAT exclusive amount, you have to use this method. Okay, let's see here. They gave us an example. All right, it says calculate the VAT amount, and then they gave us VAT exclusive amount of 34,000. Okay, so remember always what is it that you want. So here we want the VAT amount. This is what we want. All right, and we are given the VAT exclusive, and we agreed that VAT exclusive is 100%. So what I want, which is VAT, remember VAT is always 15%. So I'm going to come here, I'm going to say what I want is 15. What is it that I have as a percentage? I have my VAT exclusive, which is 100. Multiplied, therefore, with my exclusive amount, which is 34,000. This is how you must do it when you are given a VAT exclusive amount. I want you to punch that in your calculator and you tell me how much do you get. All right. You then find you get 5,100. That becomes your VAT amount. Okay. Let's quickly see. Here it is now. So I have my 34,000 multiplied by 15 over 100. That is how you get your 5,100. Remember the UK method. The UK method simply is to say what you want over have multiplied by have gives you want. This is the UK method. So the want has to be a percentage, the have has to be a percentage, and the have here has to be rands. And the answer here becomes rands. This is the method that I'm going to be using during today's lesson. All right. So you need to understand this particular method, because I'm going to be relying on this method to calculate most of my figures. Okay, let's quickly go on to another option. Now, option number 2, it says, if you're given the VAT inclusive, what does inclusive mean? Exclusive meant without VAT. All right. Therefore, inclusive means with VAT. All right. And if you remember, we agreed that exclusive is 100 and VAT is 15. Therefore, inclusive becomes your 115. So if you're given the inclusive, that means you are given the 115. Let's see. Here's the formula then. What we want is our VAT, and what we have is a 15 over 115 multiplied by the VAT inclusive amount. Now, okay, let's do the next example. All right. So in the next example, then we are now saying, what is it that I want? I want 15. Okay. So I'm going to show you, you're going to find that later, if you had the VAT amount, you could have just used it. But let me show you first the first option. All right. So when you're on option 2, remember what I want is 15. What I have inclusive. Inclusive is 115%. That's inclusive. So I want 15. I have 115 multiplied by 39,100. Okay. Please punch that in your calculator. You would find, therefore, that you are going to get an amount of 5,100. Okay, that becomes your VAT amount, the 5,100. Okay, now I want you to understand that if you would go back to the option 1, remember we had the VAT exclusive, so this becomes VAT exclusive, and then plus VAT, it will give you VAT inclusive. Okay, so you can play around with these figures. You see when I do my option number 3. Now, here is the calculation that I was doing. This is what I want over what I have, multiplied by what I have will give me what I want. This becomes my VAT amount. This is what I was calculating for the entire time. Now, when we look now at option number three, so in today's lesson, I have a couple of activities that I want to do with you. In these activities, I'm going to use option number 1, option number 2, as well as option number 3. So you must find that you understand these 3 options that I'm talking about today. They will help you to understand when you calculate your VAT amounts. And remember, when you're watching this lesson, this is not a movie. When I'm teaching, you must be writing. So you must have your pen, pencil, and paper, get somewhere comfortable to sit, and please engage with what I'm doing over here. Okay. Now with option number 3, when we are given the VAT amount, okay, we're given the VAT amount and we're given either the inclusive or the exclusive. Let's see what then happens. Here it is. Now, the VAT inclusive less the VAT exclusive is equal to VAT. That is my 115, this is my VAT inclusive, all right, minus my VAT exclusive is equal to my VAT. This is what we are seeing here. It is very important that you understand that the VAT amount will be used to calculate the VAT inclusive or the VAT exclusive amount. I'm going to show you there is a particular activity that I have that we're going to do that will show us these examples. So here you can see, if you go back to the figures that I was using earlier on, if you take your VAT inclusive, this was my inclusive. If you take your inclusive, you subtract your exclusive, you would then get your VAT straight on, and your VAT becomes 5,100. Okay. Now, these are the 2 methods that I used earlier on. When you're given the inclusive and when you're given the exclusive. And this is the simplest one. This is the simplest one, where you have both the inclusive and the exclusive. All you have to do is to subtract. I want you to open your eyes. When I get to the activities, you're going to find these 3, and I want you to do the same as I have done over here. All right, let's quickly now go to my VAT control. It is important, dear learners, that you understand how to do a VAT control account, because most of the questions that come in the exam, they would want you to explain whether VAT is payable or receivable. Now, the easiest way is for you to open a VAT control account. With a VAT control account, you are then it becomes easy for you rather to determine the amount payable or receivable from SARS. Here's my VAT control account. Remember, on the debit side, I'm going to have my input. On the debit side, I have my input. On the debit side is my input. And on the credit side, I have my output. It is very important, dear learners, that you get to understand that when we are determining whether goods are going into the input or to the output, it is easier if we follow the goods and not the money. What am I saying? What I'm saying is, if you want to know whether sales is input or output, look at the direction that which goods are taking. When we make a sale, which direction are the goods going? Out. Therefore, sales, we're talking VAT output. And when we purchase goods, purchases, now you can tell me whether it is input or output, because when we're purchasing, goods are coming in. Therefore, it means my purchases becomes input VAT. All right. Now, as you can see here, now I want us to understand, dear learners, that my VAT control account, on the debit side, it decreases the amount owing to SARS. But on the credit side, it increases the amount owing to SARS. It is also very important for you to understand that when we are finished our VAT control account, if our account has a debit balance, therefore we this is the amount owed by SARS. We are being owed by SARS. It becomes a receivable. But if their balance is credit, therefore, this is the amount payable to SARS. We are owing SARS. I want us now to quickly go on to an activity. So this is what I want you to do. Have somewhere to write, okay? Quickly have somewhere to write. And I want you to have your pen, pencil, have a calculator as well. Have a calculator as well. You need a calculator because you're going to be giving me some of the figures, all right? I want to engage with you. Let's quickly go now. Let's quickly go. So we're starting with the NSE November 2018. NSE November 2018. Question number 2. And it says, Samsung Traders is a registered VAT vendor. The VAT rate is 15%. So if I'm just to throw a question to you, where would a vendor go to register for VAT? Where do they go? Okay, thank you. Someone is saying they go to SARS. That is the South African Revenue Services. So you have to go and register by SARS. And then this is what we are required to do. It says, calculate the figures indicated A to D. A to D in the table below, and 10 marks there. Then there's a theory question which says you are the internal auditor. The sole owner Samsung used a business money to buy a new vehicle, and then we are going to answer this as we go. Explain what you do to Samsung. Let's quickly now go on activity number 1. This is the table that we have been given. Let's see now if we are able to calculate A to D. How can we calculate A up to D? Let's quickly go. And there's additional information that has been given. But let's now start with A. Let's start with A. If you look at A is very simple because we have VAT exclusive, which is 960 rands, and we have VAT inclusive, which is 1,104. So we have two amounts, an inclusive and an exclusive amount. And what they want us to calculate is my VAT. And earlier on, we established that the moment you're given an inclusive and an exclusive amount, this is a walk in the park. You simply get the difference between the two. What am I saying? I'm saying you simply come and you say your 1,104 rands, which is your inclusive. You subtract now your exclusive of 960. So you're getting the difference between these two. Please, I want you to punch those calculators quickly. How much do you get? Thank you so much. Someone is saying we get 144 rands. So my VAT here becomes 144 rands. Okay. So there it is. So you have your 1,104, subtract 960, and then this is what we were looking for. Okay? This is easy. Let's see if the next one is as easy as this one. Let's quickly go and check. The next one says purchases of stock. Purchases of stock. Okay? I know this is not part of this question, but if I may ask you, if they are purchases, is it input or output? This particular question doesn't want that. But can I ask you, someone tell me, if it's purchases of stock, is it input or output? Remember, follow the goods. So if purchases, goods are coming in. So this transaction would have been recorded on the input VAT side. All right. So here we want to calculate VAT. Now, this is where the UK method kicks in now. The UK method kicks in. So remember, what is it that you want? What do you want? What do we want here? Oh, we want B, VAT. So remember what we have established, that VAT exclusive is 100%. VAT exclusive is 100%. Exclusive. And VAT is 15%. And then our VAT inclusive becomes 115%. Okay. Now, what we want, so remember, this is the trick that you have to get. Your want, we have one thing. This is what I want, but this is what I have and have. So a have must have two values. a percentage as well as a rand. Let's quickly kick in now. What do we want? We want 15. What do we have? We have 100 because it's exclusive. What is the rand value of that 100? It is 52,600 rands. Someone please punch in the calculator. Give me the figure. How much do we get? Okay, thank you. Someone is saying we get 7,890. 7,890. That therefore becomes our VAT amount. All right, there it is, 7,890. Let's quickly go on to the next one. It says discount received. Discount received. And here they want us to calculate the VAT exclusive. Now, you have to understand that here you are given 2. My VAT exclusive is 100. We have agreed on this one already. Remember, we've agreed on this one. And then my VAT, there, 15. The inclusive, you know the inclusive already. It's going to be your 115. 115. Okay? So that one is not a big problem. Let's see now. What is it we want? What do we want? We want C. C is 100. We want 100. What do we have? You have, Mazef, 2 values. And what we have is 15, thank you, multiply by 720. And then, how much do I get? Please punch in the calculator. Give me the figure. Give me the figure. I'm waiting. Thank you. Someone is saying, Simbi, we get 4,800. My dear, that is very correct. So we get 4,800 rands. There it is. Neatly done. 4,800 rands. So you must be able to calculate either your exclusive and your inclusive when you are given the VAT amount. You simply use the UK method and then everything becomes easy. Now, here is the last transaction now, and it says cash sales. Again, I know it's not part of this question, but if you're given cash sales and you have to determine whether it's input or output, where would it go? Sales. Goods are going out. So it becomes output VAT. All right. So remember, what do we have here? What do we have? But before we check what we have, I think we have additional information. There it is. It says, in this 112,470, in this amount, it includes 0 rated goods in that amount. There are 0 rated goods that should have been sold for 5,500. So there are 0 rated goods that should have been sold for 5,500. The bookkeeper, our bookkeeper, is incorrectly included 825. 825 is the VAT. So the bookkeeper made a mistake here. All right. The bookkeeper has included 5,500 rands worth of goods. All right. But that 5,500 rand has to now be added with 825, which is the VAT amount. So the 5.5 becomes your exclusive amount and the 825 becomes your inclusive. So that means I need to know what was my inclusive amount, because here I am given an inclusive amount. So what then is my inclusive? Because you're now saying Mr. Simbi said 5.5 is exclusive. Correct. So you need to say your 5.5, which is exclusive, plus the VAT, which is 825, and then how much do you then get? You should get 6,325. Therefore, it becomes my VAT inclusive amount. So, same as this one. This is inclusive. Now I have inclusive here. So, if you are to break down what they're saying here, they are saying now, in the 112,470, this figure here, they have included 6,325. Yet, the 6,325 is for 0 rated goods. Remember, we managed in a previous lesson to distinguish between the 3 supplies. Our standard rated supplies, the ones we charge VAT at, 15%. Zero rated supplies. Remember, calculated VAT at 0%. And then our exempt items, these are not subject to VAT. Now, what the incompetent bookkeeper has done is they have taken the zero rated goods and included them into the standard rated goods. Are they supposed to be in the same amount? Completely no. So what do we have to do? We have to take these zero rated goods out first before we can calculate the VAT. Before we can calculate it, this is the simplest way that I want to show you. So let's quickly see if we can do that. What are we given? We're given the inclusive, which is 112,470. What do? I take out. What do I take out? These zero rated goods. 6325. 6325. Please punch that in your calculator. You are saying 112,470 minus 6,325. If you punch these two figures in your calculator, please tell me how much do you get. Okay, thank you so much. Someone is saying, Mr. Simbi, we get 106,145. Okay, thank you. Now, we now have our VAT inclusive, which does not include zero rated items. So it's only standard rated items in the 106, 105 now, 145. So now we can calculate our VAT. How do we do that? We want 15. We have 115. Are you following? Multiplied by that. 106, 145. How much do we then get? Put that in the calculator, please, quickly. Thank you. Someone has already given me the answer. 13,845. 13,845. That becomes your D. All right. So the trick here was that there was an error. Our bookkeeper made an error. The bookkeeper included zero rated items into the standard rated items amount. So the procedure is simply to take the zero rated items out and then remain with the standard rated items. That is what we did on the top here. Then we remain with 106, 105, 145. And then we can now calculate our VAT. All right. So there is the calculation. Also what we did. That is how we get our 6325. And then we can then do the calculations. There it is. Then we end up with our 13,845. Okay, hope this is making sense. Thank you. Thank you. Let's quickly now go to the theory question. Remember, we're going to the theory question. It says, you are the internal auditor. The sole owner, Mr. Sampson, used a business credit card to buy a new car, okay, for 460,000, and this includes VAT. This car is kept at home for his wife, who is using the car. Okay, so the car is kept at home for his wife's use. Samson says the vehicle must be recorded as a business asset. Remember now, this vehicle is kept at home. Why did he buy the vehicle? Was it to use it in the business or for personal use? He bought it for his wife, so this is for personal use. Okay, it has nothing to do with the business. But Samson says the vehicle must be recorded as a business asset, even though it is not a business asset. But Samson wants it to be recorded as a business asset. And 60,000 rands rather, must be recorded as VAT input into the books. Already you can see something is not right. Okay. Explain what you would say then to Samson and provide 2 points. Okay. Anyone? Let's see. Point number 1, this is what I would say. This, therefore, is tax evasion, okay? And he's attempting to reduce the amount due to SARS for VAT. This is illegal and unethical. Now, my next point is he will be increasing the VAT input. That is, effectively reducing the amount that he owes to SARS, amount due to SARS. He could be fined or imprisoned because it is a criminal offense. And then personal transactions and business transactions should be kept separate. This is very important, that personal transactions as well as business transactions should be kept separate. I think you remember the GAP principles, the business entity principle. So Samson should pay for this out of his own personal bank account. He must not use the business bank account when he does personal transactions. As the car is not used for business purposes, the full amount of 460,000 should therefore be treated as drawings or as a deduction of his capital contribution. All right. And then it brings us now to my next activity. I hope you guys are ready. Let's see. Quick activity. All right. It says, the bookkeeper calculated an amount of 45,600, which is owing to SARS on 30 April 2018. However, the following entries were not taken into account. So we calculated an amount of 45,600 and we established that we are owing this to SARS. Okay. But however, there are particular amounts that were not considered, transactions that were not taken into consideration. Some were omitted. Now, it therefore means that 45,600 becomes incorrect. All right. Use the entries to calculate the correct amount owing to SARS or owed by SARS. And you must show calculations. Let's see the information. There is number one. There is a sale, and then a debtor returned goods, and then the owner took goods, stationery, and then an old equipment, and then we end up with information G. I want us to treat them individually, one by one. Let's start off with the balance. It says, the bookkeeper calculated an amount of 45.6 owing. Owing comes to the credit side. This is where my owing is going to come. Okay, so this simply means it is due to SARS. This is due to SARS. This is due to SARS. And the balance becomes 45,600. That one there, due to SARS. Let's quickly look at now adjustment A. It says, a sale. So once I hear the word sale, because now I'm dealing with a VAT control account, I should be able to distinguish between input VAT as well as output VAT. So already I know you know this because it is a sale. A sale is what? Input or output, because they're going out. So a sale becomes output VAT. So already I know this is going to be on my output VAT. They say a sale of 13,210, and this is inclusive of VAT. That means this is 115%. Was not entered. This included zero rated goods of 1,710. So we have that problem again in this activity. Let's see how we can do that. It then means I need to come and say my 13,210. I then subtract. What do I subtract? My zero rated goods, 1,710. How much then, learners, do I get? Please give me, if you say 13,210, subtract 1,710, you're telling me it gives you 11,500. 11,500. And then we can now calculate our VAT on this 11,500. How do we do that? Remember, they say that amount is inclusive. It includes VAT. It includes VAT. So what do I want? I want VAT. What do I have? Inclusive. 115 multiplied by 11,500. Please punch that in the calculator. Give it to me quickly. Anyone? Thank you so much. Someone is saying we get 1,500. That becomes my VAT. Okay? Once again, input or output. Sales, goods going out. So this is going to go to my output VAT. This goes to my output VAT. Let's see. There it is on my output VAT. And then I get my 1,500 here. And remember, that was for my sales. Okay, let's go on and check information B. Information B. It says, a debtor returned the goods. So we're talking now debtor's allowances. A debtor might be satisfied with the goods. They don't like maybe the type of goods that we deliver to them, then they are returning the goods. And then they have a selling price of $6.90. And this is VAT inclusive. Once it is inclusive, I want someone to tell me 100% or 115. Is it 100% or 115? What do you think? Thank you. Someone is telling me if it's inclusive, therefore it is 115%. Okay, so what do we want? Remember, we want our VAT because we are preparing a VAT control account. So what I want is 15. Here's what I want. What do I have? We've already established that. That is a simple matter now. We have 115. Then we multiply that by 690 rands. Okay, let's see. How much then do we get? You should end up with 90 rands. That becomes my VAT. Debtor returned goods. Look at the direction of those goods now. If the debtor is returning goods, what direction are the goods going? Are they going out or they're coming in? A debtor is returning. A debtor is returning. Therefore, it becomes input VAT. Becomes input VAT. All right. There it is on the input. And I have my debtor's allowances. And there is my 90 rands. Okay. I want us to quickly go on now again to information number C. Information C. Let's hear what information C is saying. Here's information C. The owner took goods. Okay. So if the owner is taking goods for personal use, what do we call that? Drawings. Okay. So the owner took goods worth 1,200. Exclusive. Exclusive means 100%. And he also took cash. There is a catch there. Cash of 4,000 for her own use. So she's taking cash. We do not charge VAT on cash. So we are only going to talk about the goods that were taken. That is the 1.2. So we are not going to entertain this 4,000. Okay. So if the owner takes goods for 1,200, we want to establish if the owner is taking goods, what direction are the goods going? Whilst you're busy thinking about that, let's come and do calculation. What do we want? We want VAT, which is 15. What do we have? All right. The goods are exclusive. Exclusive. So exclusive is my 100 multiplied by my 1,200. That therefore is going to give me an amount. Please give in the amount. How much do we get? Thank you. Someone is saying 180. Then we get an amount which is 180. That becomes my VAT. And once I've established that it is 180, the next question then is it input VAT or output VAT? So if the owner is taking goods for personal use, just think again, are the goods coming into the business or they are leaving the business? They're going out. The owner took goods for personal use. So are the goods coming in or the goods are going out? Definitely if he's taking, they are going out. Therefore, drawings would then be output VAT. Thank you. Someone was already saying, Mrs. Simbi, it is output VAT. There it is, output VAT 180. Why? Because we are dealing with drawings. We're dealing with drawings. Let's quickly now check my next information. Information D. Stationery of 200 exclusive. All right, 230 inclusive. Okay, so here they're giving us a piece of cake. They're giving us two amounts. One is exclusive. The other one is inclusive. So two amounts, an exclusive as well as an inclusive amount. And it was bought for the business on credit. So once we have stationery, remember this now are goods coming in. So it's going to go to your input VAT. And then we are now saying 230. 230 is your inclusive minus your exclusive. 230 minus 200, that is going to give you your VAT. And already this one is an easy one, guys. Come on. 230 minus 200. Obviously, you get your 30. You get your 30 bucks. You get your 30 rands. And then, what did we say? Where does it go? We have established that that 30 is going to go to your input VAT. So, here is my 30 on the input VAT. Let's quickly go now to information E. And it reads, old equipment with a book value of 10,000 was sold on credit at a profit of 2.4. So, if I'm selling it, it is a book value. There's a book value of 10,000. That's the book value. And I've made a profit. Of 2,400. That means my selling price was therefore 12,400. That is what I sold this old equipment for. I sold it for 12.4. And the next question then is, was that 12.4 inclusive or exclusive? Was it inclusive or exclusive? That is easy. The question tells us. Exclusive. So now I know I have 12,400 and that 12.4 is exclusive. Now, let us quickly establish then. What do we want? We want VAT. That is my 15. What do I have? I have exclusive 100 multiplied by 12,400. Please punch that into the calculator. How much do we get? Thank you. Someone has already given me the figure saying, Zimbi, you get 1,860. That becomes my VAT. 1,860. The next question then is it input or output? Just look at the direction. We have sold the vehicle. We have sold it. So therefore it becomes output. Okay? Becomes output. All right. Let's quickly see. Okay. There is my disposal of the equipment, 1,860 on the output. This is information E. Let me see if I still have more. Yes, I have. F. And it says, VAT on bad debts recovered amounted to 69. So if I have VAT on bad debts recovered, the easiest way to follow it up is, I'm gonna show you this. I want you to follow it. Because here they've already given us the VAT. But what we want to know is if it's bad debts recovered. Is it input or output? Let's try to establish that. The easiest way for me to explain it to you, I'm going to be literal, I'm going to be slow, and I want you to understand this. The easiest way is to open a VAT control. Let me say this is my VAT control. Okay? And here's my input, here's my output. Okay? Now, bad debts recovered. I want to start it right from the beginning. How does bad debts come about? The first thing that has to happen is sales. So what's going to happen? I'm going to come in, I'm going to record my sales here. Sales, goods going out. Then I have my sales here. Okay? And then something happens. Maybe the debtor became insolvent and they could not pay their account. Therefore, I had bad debts then. Remember, the output, this is payable to SARS. The output, it is payable to SARS. The moment I have bad debts, it reduces the amount payable to SARS. So I'm going to have bad debts here now. That means I have reduced the amount payable over to SARS because sales, output, payable to SARS, due to SARS. And then once bad debts, it reduces therefore the amount that is payable to SARS. And then something again happens. The debt is then recovered. That simply means now we have to now reinstate the amount that is due to SARS. In other words, the amount that was due to SARS that we had reduced, we now have to increase it again. So it would mean we had bad debts of 69, and therefore the bad debts recovered now becomes 69. So I'm now going to have my bad debts recovered, and it becomes 69. Bad debts recovered, 69. So my bad debts recovered will be on the output. All right, let's see. There it is, my bad debts recovered, which is my 69. Okay, let's quickly now check if we have the last information, which I believe will be information G. Debtors settled debts of 8,600 with an EFT of 8,025. Okay, so debtors settled debts of 8,600 with an EFT of 8,000. Here it has to be 8,500. 8,000, just quickly change that, 8,525. So the debtors have settled debts of 8.6 with an EFT of 8,525. That means if they were owing 8,600 and they've paid 8,525, that means we have given them discount, and the discount becomes 75 rands. So once we give discount, it reduces the amount that is due to SARS. Therefore, it means it goes to the input VAT. It goes to the input VAT. It reduces the amount that is due to SARS. There it is. It goes to your input, then 75, that is your discount. Now, let us quickly see the account as we close it off. As we close off, we want now to establish the amount that is due to SARS or due from SARS. Okay, so we look for the side with the highest amount. That is how we always do it. All right, side with the highest amount. And the side with the highest amount, from how I see it, it has to be my credit side. Here's my credit side because this is my debit side. So on my credit side, I want you now to have your calculator. Please start punching. Start punching. You're going to put 45,600. Okay. And then you add 1,500. Please add 180. Okay. Punch that in. Add 1,860 and add 69 as well. Add 69 as well. And then the total therefore becomes 49,209. 49,209. 49,209. So I have to put it in both places now. Why? Because it is the bigger amount. Remember, closing of a ledger account. If the credit is bigger, I then put it as well on the debit side. Then I'm now going to get my balance carried down. That means I'm going to come here now and I'm going to get my balance carried down here. My balance carried down, I'm simply now saying my 49,209 subtract the 90, the 30, and the 75. And then I'm going to get my 49,014. 49,014. Therefore, here it becomes my balance brought down. Becomes my balance brought down, which is 49,014. Okay, 49,014. Then that concludes now activity number 2. I know you are saying, Mr. Simbi, we want to do an activity on our own. Guess what? I have an activity for you. So I want you now to get ready. I want to see if you understood what I was doing. So we have an activity and it's going to be 1.1.1, and then calculate the figures indicated A to D in the table below. And then there's a theory question which we are going to attend to as well. But with that being said, here is what we have. Here's what we have. And then there is additional information. So I'm going to give you exactly 5 minutes. Exactly 5 minutes to calculate for me. If you're able to do that, I want you to calculate for me A, B, C, and your D. Here is the clue with D. There is additional information with D. Okay, there is additional information. So I'm going to give you 5 minutes starting from now. Please start calculating the amounts that I've given you. You're 5. Welcome back, dear learners. I hope you're enjoying the activity that I gave you. And I find some of you have already calculated the amounts that are needed. That is awesome. That is awesome. Okay, so let's quickly go through it together. Then we see how some of you have done. So once I'm calculating, I want you to check with your work. If you're getting everything fine, then I'm happy. But if there are areas where you are getting challenged, I want you to correct those areas, and then you can do better in the next activity. Let's see now. How do we get A? How do we get A? All right. Here, calculate the amount indicated A in the table. So A is the VAT amount. It is easy to get the VAT amount here. Remember, that is what I was saying, the walk in the park. Okay. These are 3 marks. I would consider that so. Because you are having your excluding VAT and your including VAT. So the difference between the two gives you your VAT. What does that mean? I would simply get my 89,700 and then I'll subtract my 78,000. Okay, so I'm saying 89.7 subtract 78,000. Okay, since you've already calculated the amounts, it's going to be easy. It's going to be quicker for you to give me the answers. How much did you get here for A? Thank you. Someone is saying, say we got 11,700. That is very correct. It becomes 11,700. So you simply get the difference between your inclusive and your exclusive, and then you are good to go. So you can see this activity is going to go very quickly, very quickly. Let's see how to get B. B. Let's calculate B. Okay. Oh, there it is. There it is. There it is. Beautiful. Let's go to B. Calculate the figures indicated by B in the table below. There is my table. And B is VAT amount. B is VAT amount. Okay. So what I want is 15. Okay. Remember, VAT is 15. So, and what I have, this is what I want. And this is what I have. And what I have is excluding VAT. Excluding VAT, we have agreed, remember. Excluding VAT is 100%. Excluding VAT is 100%. So it's going to be 15 over 100 multiplied by 12,400. 12,400. Okay, you guys already have done this, so you have the answers for me. Please give it to me. How much do we get? Okay, thank you. 1,860. Okay, I hear most of you guys are saying that is what we got. That is beautiful. 1,860. Let us quickly then go to see how it would appear. There it is. I have my 15 over my 100 multiplied by my 12.4 to give me my 1,860. Let's quickly go on now to the next one. It is how to calculate C. We're calculating C now. There is my C. Calculating C. This is including VAT. Including VAT is 115 over VAT amount, which is 15 multiplied by 210. Okay, so it's 15, 115 that we want. 115, that is what we want. Over 15, that is the VAT amount that we have here, 15%. Then multiply by the 210. Okay, and then how much do we get? Thank you. I have an amount that I'm giving here, 1,610. Someone is saying is 1,610. All right, so that becomes your C. Let's see how it would appear. It then be 115 over 15 multiplied by 210. It gives you 1,610. Simple. And then let's now go to my last information here. And it says invoices issued to customers. VAT 158.7. That is VAT inclusive. The VAT inclusive is 158.7. We are required to calculate the VAT amount. The want us to calculate the VAT amount. But there is additional information which we're given. It says that 158,700 includes sales for 9,200, which should have been sold at a zero rate. The bookkeeper incorrectly included a VAT amount of 1.2, okay, on these goods. So here, the examiner wants you to pay close attention. They are saying in the 158.7, it includes a sale of 9.2. In that 9.2, there is 1,200, which is for zero rated goods VAT. So there are chances that you might make a mistake here. So you need to be very, very careful. You need to pay careful attention. The amount that we are given, let's start first there. The inclusive VAT, which is 158.7. 158.7 is the amount that includes VAT. What is the other amount that also includes VAT that we have? The 9.2. So I must take out the 9.2. That is the other amount that I'm given that includes VAT, because this is inclusive of VAT. And then I'm now going to end up with 149,500, 149.5. And then when I have my 149.5, this is the amount now inclusive of VAT, but it excludes the zero rated items. It excludes the zero rated items. I have taken out the zero rated items. Now I only have the standard rated items in this case then, 149.5. And then what is it that I want? Remember, here they have said D, and D is VAT. So I want VAT, and inclusive is 115. And then that should give me my answer. Okay? Anyone? Thank you. Thank you. 19,500. 19,500. 19.5. That is my VAT. Let's see when it's neatly written. I start off with my 158.7. I take out the zero rated amount. Remember, you're taking the inclusive amount. Then you remain with now 149.5. And then you get your 15 over 115 to end up with 19,500 rands. This is your VAT. Now, dear learners, this was a very exciting activity. But now you need to remember that when it comes to VAT, you also need to incorporate internal control as well as ethics. And then here we have a question which says, the internal auditor discovered that Amahle has been underpaying the amount due to SARS in respect of VAT at each submission date. Upon inquiry, Amahle stated that she used the money to pay the business expenses. Already, there's a problem here. Already, there's a problem because she has used the business, the amount due to SARS, for VAT. She has used that amount to pay for business expenses and adjusted the payments later. Okay, you can follow what is happening here. Now, comment on this practice and give Amahle some advice. We need to comment on this practice. What practice is it? She has been underpaying the amount due to SARS in respect of VAT. On every submission date, the amount has been underpaid. Let's see now what is your advice. Now, this is unethical to use money that is not earned by the business, especially the money that is collected on behalf of SARS. The business is an agent of SARS and must make payments timeously. Remember, we are not collecting the VAT for ourselves. We are collecting it on behalf of SARS. We're an agent of SARS the moment you become a VAT vendor. The business can be fined, that is, they can pay penalties for non-compliance. This is evasion and manipulation of figures. It could result in a more extensive investigation for irregularities in the future. So it's going to simply cause more challenges for the business because investigations are going to start taking place. And this is rolling off of cash. This is rolling over of cash. And it also is evasion, which could lead to serious problems. This is now the advice that you need to give to Amahle. There is need to keep proper records and ensure that funds are always available to make payments. Because the problem here is we are taking the money that is due to be paid over to SARS to pay our business expenses. So we need to keep proper records so that whenever we collect our monies, we are able now to pay for business expenses without having to take the money that is due to SARS. The money that is due to SARS must be paid to SARS on time on every submission date. And you have to note that submission dates are adhered to. Okay, submission dates must be honored. And then we can only use business funds money to cover our own expenses. And we must, this is very important, we must work within our budget confines. Okay, I want us now to go to our last activity. I know you are excited to do this activity because some of you got answers in the previous one and some of you had a little challenges. So now I know you are ready and you want to experiment with this next activity. Without further ado, let's go and check the next activity. It is the June 2021 paper. Let's see. It is talking about the implementation of VAT. Explain why the government implemented VAT in South Africa. State 1 point. Very good question. Why did the government implement VAT as a form of tax in South Africa? You need to state 1 point. Here, I think we have several points. We have more than one. All right. Explain why some products are zero-rated products. State 1 point. Okay. Why are some products zero-rated products? And then we have to calculate the amount payable in respect of VAT for the 2 months ended 30 April, year 2021. And here is the information. Okay. So they want us to calculate the amount that is payable to SARS, and they give us the information. Okay, let's start now. Explain why the government implemented VAT in South Africa. 1 point. I have more than 1 point. So be ready to start taking these points down. Please, I want you to be writing. Number 1, additional source of revenue for the government on a regular basis. Remember, the government needs to have financial sources. So VAT is an additional source of revenue for the government. And it is also to fund infrastructure. We're talking about public roads, hospitals, and other services. So the VAT amount is used now to fund public infrastructure. And then to provide for basic essentials for communities. So we use the VAT amount to provide for basic necessities for the communities. Okay. And then it is also to finance public debt, okay, and maintain the large state-owned enterprises, okay. Finance public debts. Public debts needs to be paid, so the amount will therefore be from the collection of VAT, as well as maintaining large state-owned enterprises. It is an indirect tax that is paid by all, easy and quick way to generate extra funds. So everyone is subject to VAT. So it becomes now a way which is easy to collect funds. Explain why some products are zero-rated products. State 1 point. Why are some products zero-rated products? Okay, let's go. To make basic necessities affordable, especially to indigent communities, to people who cannot afford, okay, to help them to live a better life, that is to provide food for themselves and their families. And you have to understand that these zero-rated products, these are products that you need for your basic life, for you to be able to sustain living. If you now come to the next point, it says zero-rated items are regarded as essential. Remember, we're talking about your basics, what you need for survival, what you need for life. And they're consumed by all, therefore they should be accessible to all. Okay. Now, let's go to calculations. I know you want to do more of calculations. Let's quickly do that. It says, calculate the amount payable to SARS in respect of VAT for the 2 months ended 30 April the year 2021. Let's see what comes. There is my information. Okay. All right. Let's see. Let's start with the first one. The balance due to SARS on the 1st of April, due to. Okay. Someone tell me if it says balance due to SARS. Okay. Balance due to SARS. Does it mean that SARS is owing me or I'm owing SARS? Balance due to SARS. If I'm to open a VAT control account, is it going to be on the input or on the output? Due to. So it is payable to. So my output is the payable side. So this balance, therefore, should go to the output side. That is the credit side of the VAT control account. Let's see if I'm to prepare. There it is. There is my VAT control account. Okay. So if you're to do a VAT control account, you'd find it on the output. That is the credit side. Balance due to SARS 9450. Let's quickly go now. The first information is saying total sales. Total sales. So here we have sold goods. I'm going to ask you again that very simple question. If I've sold goods, input, output. Okay? Input, output. Sold goods. Goods are going out, so it becomes output VAT. So already here I know this is my output VAT. Oh, here they give us another easy one. You see, it's an easy one. Why do I say it's an easy one? Because you are simply saying 473,800, remember, minus 412,000. You just get the difference. I'm waiting for you guys to give me the figure. I'm waiting. Okay, I can see you're busy with the calculators. How much are you getting? Thank you. Someone is saying we get 61,800. 61,800. Let's see how it would appear in the VAT control account. Sales, 61,800. Okay. Next one. Purchases of trading stock. We've purchased some trading stock. Input, output, purchases. Thank you. Answers are coming in now faster. Someone is saying purchases is input VAT. Purchases is input VAT. So what we want is the VAT. VAT is always 15, remember? Amount excluding is 100. Remember that? Thank you. Then you multiply that by 230,000. Please punch that in the calculator. I want you to give me an amount. How much do you get? Okay, I can see you're still busy. Yes, you're saying 15 over 100 multiplied by 230,000. Thank you. Someone is saying you got how much? 34,500. Thank you so much. Someone is saying 34,500. Once you get your 34,500, now you need to understand purchases, input, output. Thank you. We have already established it is on the input. Purchases 34.5 input. Okay, let's go on to the next one quickly. The next one, it is now your discount allowed to debtors. Discount allowed to debtors. If we have discount allowed to debtors and they give us the VAT amount, the one question you need to ask yourself is, discount allowed, does it increase output VAT or decrease output VAT? Okay? So you have to understand it from the sales perspective. We sold goods, output VAT increases. VAT payable to SARS increases. We give discount, output VAT decreases. If output VAT is to decrease, it decreases by us recording it on the input. So discount allowed is input. So I should now be able to see it on my input over here. Discount allowed 1,890. Simple as that. Okay, let's now go and see the next one. Goods returned by customers. Goods returned by customers. What direction are those goods going? They're being returned by who? Customers. That means they've gone out, sales, being returned, so they're coming in. So we're talking input VAT. We're talking input VAT. So what do we want here? We want VAT, which is 15 over amount including VAT 115 multiplied by 19,320. Okay, please punch that in the calculator. I'm going to give you a second. You're saying 15 over 115 multiplied by 19,320. Someone give me the figure, please. How much do we get? Thank you. Someone is saying we get 2,520. 2,520. So where does it go? We have already established that it goes to the input VAT. VAT, there it is. 2,520 on to the input VAT. And then the next one now is bad debts recovered. Bad debts recovered. This rings a bell, isn't it? We did one like this earlier on today. Bad debts recovered. Okay, so when you have bad debts recovered, we have established already that it goes to your output VAT. Output VAT, and then the amount is 1,140. So I'll come here, bad debts recovered 1,140. Where? On the output VAT. And then the next one is drawings of stock by the owner. If the owner has taken goods for personal use, and we just follow the goods. What direction are the goods going? Drawings. So the goods are going out. And they gave us the VAT already, so there was no need for us to calculate. And remember, this is your output. So I'm going to come here, 1,380. That is my output VAT. Now, let's see how to look now when it's a composite thing. Here is my VAT control account. So how do I close it off? I would add first my credit side, and then I get my 73,770, and then I bring it also here, 73,770. Then I now subtract my 2,520. I subtract my 35.4, 1,890. Then I'm gonna get now my 34,860, which becomes my balance carried down, 34,860. If it's carried down there, remember it has to become brought down here, 34,860. Once it is here, what does that mean? This is an amount payable to SARS. It is due to SARS. Now, as I've come to the end of my lesson today, there are things that I want you guys to remember. We spoke about the different types of supplies, standard rated supply, zero rated supply, and then exempt supplies. We also went on to talk about the different calculations when you're given inclusive VAT, when you're given exclusive VAT, and when you're given both the inclusive and the exclusive. We are also able in this particular lesson to determine if goods are coming in, input VAT, they're going out, output VAT. And it is easy to trace your things like bad debts recovered and discount allowed and your drawings just by following the goods or the initial transaction thereof. And we have also discovered today that when your amount is on the credit side of your VAT control account, therefore the amount is payable to SARS, due to SARS. Now, I want to encourage you, dear learners, go back and view again our previous lesson, which we did last week. It is very important because there you get more information as well. Until next time, I want you guys to continue studying, continue working. From this lesson, you should have picked up that once you do more than one particular paper, you do 2 papers, you do 3 papers, you do 4 papers, you will find that the questions now end up looking similar. You end up understanding a lot of what the examiner needs. More practice, regular practice. Never let a day go without you doing an accounting question. Accounting is the subject. Dear learners, thank you so much for joining me today. For me, bye-bye.